Hello everybody, so this video is entitled Strategy. MSTR stock buys Bitcoin and cash, and it's all about the BTC rating. I think that's the current strategy. I guess you couldn't really have been wrong about what happened yesterday, because everybody got a little bit of what they expected. I expected cash. He did buy some cash. Most people expected Bitcoin. He did buy some Bitcoin. So he actually bought both cash and Bitcoin. And my point I'm going to make is the Bitcoin is here to increase the BTC rating on the preferreds, and the cash is here to help the rating agencies improve that rating. It's all about the preferred. The strategy has entirely shifted towards the preferred. Of course, I am not happy on a first order thinking level. I'm not happy to see the ATM at 1.05. But I don't think he's doing the ATM right now, the common stock ATM, to collect 5 cents on every dollar of dilution. I don't think that's why he's doing it. I think he's doing it because he's realized that cash reserve and that extra Bitcoin on balance sheet will increase the attractivity of the preferreds. It will increase the attractivity of the preferreds. In fact, it is to the point that now the reserve, the USD reserve, with extra 62 million, we're at 32 months and a half. 32 months and a half of dividend coverage. The rating agencies are going to begin to be sensitive to that. So like I said, on a secondary or tertiary level thinking, he's actually doing that because of round 2 and round 3 of a company. Round 2 and round 3 of a company is about revolutionizing the credit market. It's about using Stretch to revolutionize the savings market, the company cash market, all that sort of stuff, as well as helping Strike, Stride, Strife, and Stream. But it's mostly about Stretch. He wants that iPhone moment to happen. And even though the story in the past, you go 2 years back, Saylor story, MSTR story was about adding Bitcoin opportunistically. Right, and so you issue equity to add more Bitcoin. That was collecting any amount above the 1 in the MNAV, right? When you were sitting at 1.8, you were collecting 80 cents on the dollar. So you were adding Bitcoin opportunistically. You were being opportunistic. You were still a fund. That's not what he's doing anymore. Now he's going after the credit market, the entire credit market. And like I said, he's doing it for 2 reasons. You need a better credit rating. The credit agencies just value Bitcoin. USD. They just value cash. And so you got to stack some cash in the short term to assuage the fears of the rating agencies and the credit ratings. And that's very unfortunate because even it's a melting ice cube, as I always say, but you have to do that to please the geriatrics department at S&P. You may remember that Tesla never catered to them, and they were added something like 5 years late to the S&P 500. Tesla was also very, very late to get a credit rating. Saylor is not trying to fight the system and just ignore whatever rating agencies say. He's trying to, play the game and showing the rating agencies what they want. And the rating agencies value cash. We know the rating agencies look at Bitcoin and they value it at 0. They haven't gone through the accounting change that FASB has gone through. So I think that's the reason why he's stacking cash. He's doing really, really his best for Stretch to be activated, and Stretch is nearly activated. We'll see. We went as high as 99.96 this morning, and it's just the beginning of the day, right? And so he's adding Bitcoin too, right? Why is he adding Bitcoin? He's adding Bitcoin because he wants a higher BTC rating. Whenever he adds Bitcoin to the balance sheet via the common ATM, you're increasing the Bitcoin rating. You're increasing how many dollars worth of Bitcoin backs each debt. And some of the debt has really high BTC rating. Like the converts, for example, with Saylor, it's more than 50 BTC rating. So it's like for $100 worth of convert, you have 50 times as much. So you have $5,000 worth of collateral. But I think if he can have a BTC rating of, say, a 6 or a 7 on Stretch, as opposed to having a BTC rating of 3, that's going to be much more attractive. And so he's proactively increases the Bitcoin on the balance sheet because that's going to increase the BTC rating. The more we go into the preferred era with a big, unencumbered, permanent stash of Bitcoin, the greater the BTC rating is going to look. That's going to please to the individual investors. That's going to please the funds. That's going to make the bid on the stretch and all the other prefers better. And this is going to please the rating agencies. The cash stack is going to please the rating agencies. And so that's why I think he's still issuing ATM even at such a small MNAV. That's the main explanation I got. Anyways, the news this morning, stretch and the strategy of the stock itself is reacting pretty well. Stretch, we're up, and we were at 99.96. Perhaps today we hit 100. Remember, eventually we will hit back of 100. It's just a matter of time. And as soon as we get to 100, stretch is going to be issued, and we're going to be ATMing stretch. And the ATM on stretch is eventually going to replace the ATM on MSTR. Note how MSTR stock is behaving properly today. About 2% more than Bitcoin, and Bitcoin's up 4%. I guess just a tad lagging, but barely. The Bitcoin strategy of the company is reacting as we expect. Of course, if we are ever to recover in MNAV, if we're ever to go back to a 1.6 or 1.8 MNAV, we need to have dozens and dozens of good days. But at least today we're not sad about the performance of strategy, and all eyes on stretch. All of my eyes are on stretch. And by the way, I'll conclude this video talking about Bitcoin. The Bitcoin rebound seems to be here. As I record this, actually some exchanges are showing Bitcoin at 94. The annoying manipulation Sunday night to Monday morning that we've witnessed for the past 3 months. They had a 3-month streak of doing it like that. You run it up at night, you crash it in the morning. We had a 3-month streak, and that streak just broke. That did not happen this morning. That streak just broke. That is why we say time in the market matters more than timing the market. You can't time the market. If you want to still own Bitcoin when the streak breaks, as it seems to be breaking right now, and bear in mind, we could race back to 100 pretty quick, you gotta own the asset, because you can't predict whenever manipulation ends. It's a coiled spring. At some point, it pops. You can't keep the pressure on forever. And it seems like Binance and the liquidation level manipulation, they were able to keep the pressure on for 3 to 4 months. It seems like they're letting in some air, letting Bitcoin breathe a little bit. And so, of course, that's good for us. That might be a nice sign for risk assets coming into 2026. I mean, going into 2026. We are now in 2026, and it's a good start. So I'm pretty happy about it. All of your stocks, by the way, are bouncing too, not just MSTR. So I'm pretty happy about all of this. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe. Follow me on Patreon. Follow me on X. Thank you for watching, and have a wonderful, wonderful day.